Hi everyone, it's Ben and welcome to OTCAlpha.com's Penny Stock Basics course. This course is designed to give you a basic understanding of the awesome penny stock market and is your first step to successfully picking, trading, and profiting with penny stocks. But before we begin, let's talk a little bit about who I am and why I'm qualified to teach you this information. My name is Ben. My picture's up there in the right-hand corner. I'm looking pretty nerdy on Wall Street. But I actually live in Oregon. I live on a farm that's been in my family for many years. And I'm a full-time penny stock trader. Yep, full-time penny stock trader. I trade out of my home office on the farm. And how this happened is 7 years ago I got laid off from my job and I turned a $1,500 tax return into over $130,000 in 2 years just trading penny stocks. Now I trade full-time and teach others to make money in the penny stock market. So that's a little bit about who I am. We'll get to more of my story later, but let's talk about what we're going to learn in the first lesson of this course. Today, you're going to learn what penny stocks are. You'll also discover the exchange or the marketplace they trade on. We'll talk about penny stocks versus blue chip or big board stocks. Why trade penny stocks at all? The awesome potential that they have. And part of that is I'm going to take you on a live trade where I make $1,700 in 1 hour trading penny stocks. Let's get to today's lesson starting from square one. What are penny stocks? Well, penny stocks are low-price securities or publicly traded companies. Publicly traded companies are companies that have gone to the public and offered shares for sale in exchange for a percentage of their business or company. The SEC or Securities and Exchange Commission, these are the guys that oversee and govern all public companies. They consider a penny stock to be anything that trades below $5 a share. So anything that trades below $5 a share is considered a penny stock. Penny stocks are also lower valued securities. They have a lower total company value, usually below $50 million, and oftentimes much lower. So in other words, penny stocks are small companies often just getting started. They're startup companies with little or no capital to work with. So they need money, and this is the reason why they turn to a public offering, so they can sell shares to the public and raise capital for their business. This makes them volatile investments with a high level of risk. Now I have investments in quotes because with penny stocks we will not be investing in the traditional sense. We will not be buying and holding a stock for a significant amount of time waiting for the company to earn more and therefore increase the value of our shares. Instead, we will be applying other strategies and philosophies like day trading, flip trading, swing trading, momentum trading, and all these other things I will teach you in advanced courses with OTC Alpha. Moving on, here's a benefit. Because of their low value, there is also potential for a high reward. So because these companies are starting at the bottom, there's a potential that they would succeed and become high-grossing big companies. And most penny stocks do not trade on the major indexes and markets. Instead, they have their own marketplace where shares are exchanged. 99.9% of all penny stocks trade on the OTC Markets or over-the-counter marketplace. I put a URL down there in pink, and in another course we're actually going to be taking a deep look at the OTC Markets website, showing you tips and tricks and tools you can use to help you become a better trader on that actual site. But for now, we're just going to have a brief introduction of the OTC markets, and we'll save the rest for a later course. OTC penny stocks are traded by broker-dealers who negotiate directly with one another over computer networks and by phone. So to translate that in simple words, you can trade penny stocks just like any other stock. You can go online, open a broker account with TD Ameritrade, E-Trade, Ameritrade, whatever trade, sign up electronically, and begin to buy and sell these securities. Think of the OTC markets as a separate exchange organism, much like the New York Stock Exchange, the Dow, the NASDAQ, etc. And if someone tries to tell you there aren't a lot of trades happening on the OTC, there's not a lot of volume, there's not a lot of action happening, you can always find a trade. There are over 10,000 securities that trade over the counter. As a personal witness, I can tell you that I see stocks go up in big quantities every single day on the OTC market, sometimes upwards of 300 or more percentage. Every day there's a stock that does that on the OTC marketplace. It's incredible. Penny stocks versus big board stocks. So we have the classic big board of blue chip stocks. We have the New York Stock Exchange, the NASDAQ, and the Dow Jones. So what is different between the securities that trade on these exchanges and penny stocks? Well, let's start out with saying what penny stocks are. They're high risk. Now this is kind of a no-brainer. We all know that all stocks are risky. Penny stocks have a very high risk to them. They're highly speculative and momentum driven. They have lower reporting standards. These are mostly new companies just getting a foothold, getting started. They are lower price securities, like we mentioned earlier, below $5. In general, there's lower dollar volume. The total volume in dollar amount for the day is smaller. But there's also higher price swings, so they move in bigger percentage increments. And there is some technical analysis applied when trading penny stocks. Moving over to the right-hand side, let's talk about large cap or blue chip stocks. Now they are also very high risk because all stocks are high risk, but they are based more on value and fundamentals, so more practical things like earnings, what the company actually made on paper. They have strict reporting standards. They are often established companies. These are companies that have been around for a while. They've been in business for a long time. They know what they're doing. And they're higher price securities from $5 ranging upwards of $500 and more. I mean, the last time I looked at Google, it was trading above $700. So the gap between $5 and the highest priced blue chip stock can be very, very large. Big board stocks also have a high dollar volume, billions and billions of dollars traded, and very small swings. So opposite of penny stocks, you won't see a big board stock move up and down in huge percentage increments like the penny stocks will. And there's also heavy technical analysis and application when you're trading the blue chip stocks, like charting and fundamentals and things like that. Now that we know some of the differences between penny stocks and big board stocks, I thought it was really important to highlight why we should trade penny stocks at all, the benefits and the pros of choosing penny stocks as opposed to other marketplaces. And the number one reason I think we should trade penny stocks first is the low barrier of entry. And what I mean by this is it doesn't take a lot of money to get your skin in the game and start learning the market right away. You can open an account with as little as $500, start trading, and get more bang for your buck. So instead of buying a half a share of Google for $500, you can instead find a stock that's trading at $1 and buy 500 shares of that stock. So this allows people with only a little bit of money or capital to trade and learn the markets. So in another sense, it's a safe way to learn the penny stock game. If you start out with a little bit of money, learn the market, then you can increase your portfolio and you can increase the money you deposit if you wish, but you don't have to have a lot of money to even have a chance in the penny stock market. You can put a little bit of money in and have a tremendous chance of making a lot of money. That leads me into number 2, high volatility and high reward. There's more frequent profit-taking opportunities because there are greater price swings with large percentage gains. There's a large return on a small amount of money. So you're seeing a bigger return on that small amount of money that you're using. And I have an example here. This is a stock. I got a screen capture the other day. It was up 300% in one day. That just gives you an idea of the potential of how penny stocks can move in one day by upwards of 1, 2, 300%. And you notice the volume is at 391 million shares. That's no small volume either. That's a lot of dollars going into the penny stock market. The potential is huge. 300% in one day, 391 million shares traded, $230,000 in volume just in one day trading penny stocks. One penny stock. Number 3, grow your money fast. So these all kind of flow into each other if you've noticed. Penny stocks allow people with small amounts of money a chance to build their portfolio much quicker than big board stocks would ever allow. Let's take an example here. I buy 50,000 shares of a stock for 1 cent a share, totaling $500 invested. 2 days later, the stock has news that sends the share price up 100%. I cash out with $1,000 to trade with, doubling my original investment. Now, how often do big board stocks do this? Not often at all. Most big board stocks only go up 10% in an entire year, let alone one day with a penny stock. Reason number 4, why trade penny stocks? Merger, acquisition, and buyouts. Some penny stocks are in a position to be bought out or acquired by large name competitors. This can bring huge value and gains to the shareholders. So even though it's kind of a crapshoot, there are a lot of small penny stock companies that get bought out by bigger competitors every single, I would say even every single week. So there's always a chance that this small company that's paving its way in the marketplace will be bought out by a competitor. Reason number 5. This is a fun one. Penny stocks are driven sometimes off of hot market sectors and trends. Hot markets see an influx of money based on speculation by investors that have big money to take a risk with. Learning to recognize these trends can lead to a high profit potential. So right now, the fastest growing industry is marijuana. A lot of marijuana stocks are taking off, and what's even more great about that sector is a lot of these marijuana stocks have to be penny stock companies because they're not recognized federally as legal yet. So you can take advantage of, this opportunity just because of a federal regulation and make a ton of money on marijuana penny stocks. And the last financial reason is short-term commitment. So your money is not tied up for a long amount of time. Sometimes trading big boards, you can put your money in a stock for an entire year or longer, and your money is tied up, you can't touch it. Whether the stock's going up or down, it's not a big enough movement to warrant you taking out your money or taking your loss, taking your profits, etc. So most penny stocks are short-term trades, not long-term investments you wait years for a return on. Many trades completed, that means bought and sold, so you can buy and sell a security often the same day. So it's all done in one day sometimes. I would say the longest I'm ever in a trade is maybe 3 to 4 weeks. So very short-term commitment. So those are my 6 main reasons. And I wanted to cover and scratch the surface a little bit of lifestyle reasons because I think those are important. It's one of the major reasons I trade penny stocks, and I can trade from anywhere. It's a rare opportunity to turn a little into a lot. So that's kind of piggybacking off of what I said in reason number 1. You can turn a little bit of money into a lot of money. The possibilities of a better life and monetary freedom. This is kind of what it's all about for me. Monetary freedom and job freedom. I can be my own boss. I can work from anywhere, spend more time at home with my family. I love the fact that I don't have to be constrained to an office. I can trade from a train station, a coffee house, Hawaii, whatever. And we all like to build something big. There's a potential here to build your portfolio, turn that money, invest it other places, and build something big. And the bottom line is you can live the way you want if you're making this money. And I've traded penny stocks for 7 years now, making 5 and 6 figures every year. And let me tell you, my lifestyle has improved. You can live the way you want. You can live life more on your own terms. So that is an introduction to penny stocks. I decided to end with the pros and the benefits because obviously I believe in them. I've been doing it. I am proof that it works. And now, since we are finished with the teaching lesson portion of this video, I'm going to take you to a live trade where I make $1,700 in 1 hour, just to give you an idea of the potential of penny stocks when you apply the proper knowledge and tools, what is possible in an hour trading penny stocks. So enjoy the video. If you have any questions, please feel free to ask me, and stay tuned for the next lesson. We'll talk to you guys later. Bye. Hey everyone, this is Ben, and I wanted to do a quick video because I just made $1,700 in one trade trading penny stocks, and I was in and out of the stock probably within an hour's time or less with a $1,700 profit. So I want to show you how valuable having the right tools and resources are. This was a momentum trade. It's kind of my specialty. So I'll show you exactly step by step how I made this trade. So step number 1 is I was watching my news feed. It's been a slow market, but you have to have patience. You can't jump the gun on stocks until you find one that meets all the right criteria. So it's been a slow week, but I've been scanning and looking at the news feed, and this news came out right here, symbol MJMJ. Scroll down and it says, History Channel documentary featuring the Mary Jane Group Incorporated and the Bud Plus Breakfast set to air on Monday, January 16th, 2016. All right, so there's a couple things going on for this news here. First of all, have a news feed. If you don't, you're kind of like a blind trader because especially in penny stocks, it's based off speculation and momentum, and news really impacts how stocks are traded, and the dollar volume and the inflection. So, so basically, I saw a couple things here. History channel, that's a big key indicator that this could run because it's a big name. These are penny stock startup companies. So when you see a name like the History channel, that's a big buzzword for traders to come in and look and see what's going on. So anyway, that's all I pretty much needed to know. You know, this has to be quick. Penny stocks are quick. You can't take a lot of time, but it just takes practice. So I saw the History Channel news, and the first thing I did after that is I pulled up my level 2, and I put in the symbol, MJ, and I saw where it was trading at. And, you know, I saw if it was in a sweet spot, if it was already up too much, already down too much. And here you see it's up 366% today. But when I saw it, it was trading, see the low right here is 0.0003. And so when I saw it, it was at 0.0003, and that was the bid, and the ask was 0.0004. So the next thing I did, it looked good. It wasn't up too much already. It's in a nice sweet spot price range. So the next thing I did is I pulled up the OTC Markets website, and I put in the symbol in the OTC Markets website because I wanted to check just one thing. I wanted to check how many shares the company has outstanding, because that affects the price, and that affects how easy the stock is to move or not. So I saw down here, we look right here, outstanding shares, it's almost 1.5 billion shares outstanding, which sounds like a lot, but for a stock in the 0.0003 price range, that's actually really good for the news it had. So I took in consideration the news, the shares outstanding, and what the stock was trading at. And that gave me enough indicator that I should probably pull the trigger on this stock and take a chance on it, especially for a momentum stock. The other thing you look for is if there's volume starting to happen, people are taking notice. So I saw a little bit of volume, a little bit of influx in the stock. I decided to pull the trigger. Okay, and so you see here, this is my real E-Trade account. You see down here at the very bottom, that was 1.5. That was a few days ago. And today is 1.7. So I bought 10 million shares for $4,000 right here at so here's the price at 0.0004. So I bought 10 million shares, and then I proceeded. The stock ran, the news spread, people got word on social media and the investor networks and the message forums, and you can see right here, I trickled off all of these shares between 5 and 7. So, and you saw before, it's up a lot more now. This was a conservative trade on my part. It went up to, I think, 0.0015. Let's take a look. So the high today, yep, 0.0015. So I sold way early, but you know, we have a saying in the penny stock world is any green is good. So you got to take your money off the table. You got to profit. You're always going to be kicking yourself in the head, just saying, why didn't I wait longer? But on the flip side of that, sometimes if you wait too long, you can end up not only losing your profits, but actually losing your account balance. So I'm conservative. That's why I've been trading penny stocks for 7 years. I decided to peel off my shares. The strike price was 0.0004, and I started peeling off my shares between 0.005 and 0.007. And I want to point out something here. I did do a wire out, so I wired out $700 out of my account because my wife needs a new pair of shoes. So I wired that out, so that'll reflect in the balance. But now if we go over to my balance, you can see the previous close as of 1/6/16 was $11,620.87. The real-time value right now, you see it's 1/6/16. 7/16 at 3:32 p.m. Eastern is $12,659, and then you add on that other $700 I wired out already, and that totals about just over $1,700 I made on one trade. And I think we can look at the timestamps here. Or I guess there's no timestamps, but I think it was within an hour that I made $1,700 trading one stock. So let me just go over this again. I saw the news here. I came down to my level 2 quotes, saw what price it was at. At the time, it was around 0003, 0004. So that was enough indicator for me to come here to the OTC Markets, put in the stock symbol, check out the situation with the share structure right here. That gave me enough information to go ahead and pull the trigger with the trade. We can see right here, 10 million shares at 0004, and it led to a pretty hefty profit. So that is a classic momentum trade. It could also be called a flip trade. I decided to get out of it today and not hold it. Sometimes I will hold the stock for longer. Sometimes I'll peel off a lot of a position and leave some of it, kind of riding the house's money. But I decided to take the profits and make this video so I could show you guys the potential of penny stocks and how you can wait and wait and wait. And if you have patience and if you have the right education and the right tools, in one day, not only that, in 1 hour, you can make, for some people, a month's salary. So, and that was in 1 hour trading penny stocks. So thanks for watching. If you have any questions, feel free to ask me, and I'll talk to you guys later. All right, bye.